the Sunday, which is, we're going to make it a good one. So we're really closing this session by talking about, I guess it's the institutional adoption, really, of crypto. So if we think about it, the global population is about 8 billion people. Around 5 billion of those people are on the internet. And as Neil shared earlier, we have about just only 400 million crypto users. So if we put that in context, it's really just a splash. It's a tiny number of crypto users. So what we really want to get to the meat of this final session, rousing panel, is what's going to take us to that next level. How are we going to get the billions into the crypto ecosystem? And specifically, is it going to be the banks, the traditional financial institutions, the centralized intermediaries that govern our global financial system today? Are they going to be the ones that get us there? So I'm going to hand over first to Ben to really sort of set the scene and get your thoughts on where you think TradFi is going to get this asset class in the next 6 months and maybe then sort of looking out 3 years.
All right. It's a very interesting thing. So actually, this is a theme that I've been exploring for a couple of months or weeks at least now, and some of the participants in this audience will surely recognize remember a Twitter Spaces that we had with those participants precisely on this question, whether TradFi and let's say the crypto space at large depend on one another or inevitably are to clash. And we're not really talking here about the regulatory piece. It's not about what are best practices, because some things are pretty obvious and some things we can invent. It's really about, even if we look at, let's say, Dubai, just to take a random example. It's not that random. But let's say we take Dubai as an example. We want the liquidity, we want to build the exchange, we want the people to be able to on-ramp easily, even through brick and mortar infrastructure. In the end, most people still hold fiat. And in the end, for that fiat to enter the crypto markets, there need to be the on-ramps. And so where we were maybe 10 years ago, kind of peer-to-peer and walking around meeting people in bars and cafes, as one of my friends shared from his experience, that's obviously not very scalable in the long term. But then how do we do that? If we have the banks, are they really in support of the one thing that is so disruptive it might undo the banks? And I often say, we often say Bitcoin is there to serve the 2 billion unbanked. But maybe from my perspective, Bitcoin is there to unbank the masses. Now that's a very controversial statement, because I don't wish for anybody to lose their job or to lose their industry, their career paths. But we always have to innovate, and we have these questions around AI, and we have these questions around digital assets. And so my perspective is we definitely need one another at this stage. But personally, from my kind of genuine perspective, I'm very bullish and very hopeful for innovation to really serve the masses. And when it serves the masses, it will take precedence and it will dominate. Now, whether that's 10 years or 20 years down the line, I don't know. I do believe that the coming 12 to 18 months might be the most interesting times in the space in terms of reaching the next phase. Yeah.
Angelina, what do you think traditional financial institutions are thinking about? What's really holding them back? Do you think they're being held back by this new emerging asset class, or do you think they're quietly, stealthily working behind the scenes and they're going to really show their cards very soon and really jump ahead of many of the crypto players that we have out there?
There's two groups of people, I think, or two groups of institutions out there. There's one group that has embraced it quietly, and they are beavering away feverishly, hiring. They're putting in place systems, they're putting in place desks, and you know who they are. They're the Goldman Sachses, they're the large bulge bracket investment banks. So you're seeing them moving into space where FTX, where other firms were moving into traditional finance. So you're seeing those houses move in, and you're seeing on the other side, digital asset firms also move into traditional finance. But then you're seeing another group of people who are going, you know, we like crypto, but this crypto winter is really not letting up. Some of the profits are deteriorating. And you know what? There's so many other markets that we can get into right now. India's opening up. China, of course, is moving up in terms of QFI. Things that were sort of dead are now coming back, which sort of takes the shine off of crypto. So there are other alternatives for the largest market makers in the world who were already in crypto and trading. And they're having lots of problems because also market makers, for example, use highly automated systems. And for many of the exchanges that have different protocols, they don't use necessarily the same form of technology as perhaps regulated exchanges would. So unless and until you get more consistency in rules, and that's something that's very exciting about what VARA is doing, having a consistent policy, which is unlike any other regulator in the world right now. Until you get those rules and laws in place to make virtual assets a real asset class, which is what we all want, that's what's going to hinder the big market makers. Some of the traditional finance people move in. Of course, there's the special ones that are already in, but you won't see that bullish, I'm going to run in anymore, because the numbers aren't there right now with this crypto winter, and people are not making the P&L. So there's other choices. So that's just one view. But I think we're seeing that with a lot of, especially the jumps, the Optivers, they're really looking at what they're doing with their crypto right now, or their crypto trading. So.
Ragulan, so you work with Circle. Circle has 30% of the stablecoin market. And what we're really talking about with Circle is getting money onto a blockchain. And arguably, that is going to be a vital catalyst for this industry to move forwards, is to really get money in a compliant way on blockchains, moving around a global digital economy. So do you think that is actually the catalyst for the financial institutions that are put off by crypto winters, for the symbiotic relationship between DeFi, protocols, and banks? Is that what's missing? Is that what Circle has its eye on as being the catalyst to really take this asset class to the next level?
Let me take a step back. I was actually just I've come to Dubai a lot, but I was thinking about the first time I came to Dubai, which is in 2000. The Burj Al Arab had just been built. And I remember as a young boy, basically, watching this city sort of coming to life, you know. And the fact that there's places like Dubai and Hong Kong and Singapore, you know, these cities are made on trade, right? They're made on the fact that people want to exchange value globally, and they need to find centers through which they could do it. This was often like commodities and physical trade. It was, you know, simple goods that were being sold, for example, right? And that's why Dubai has been so successful, and that's why we're sitting here in this beautiful museum of the future, right? But over the last 20 years, since essentially the dot-com boom, we have had that movement of trade move from physical goods as the majority to digital goods as the majority. And the borders, you know, when you look at the world, you don't see borders. If you're sitting here on a space station, you look at the world, you don't see borders, right? And those borders have been bashed right open. And people can trade digital goods, or they can trade services openly. And we need the ability for people to move value between each other. And there has to be a way to do that. And I think that's the origination of Bitcoin and blockchain technology. Now, there is this friction as a result between, you know, who should be the custodian of that? Should it be a bank, or should it be, you know, the innovators, you know, in the virtual asset or digital economy, right? And I think the answer to that is it's got to be a mix of both. If you look back at the digital, I heard someone in the previous panel talking about Amazon, for example, right? You know, Amazon's come along, but Walmart's still here, right? Netflix has come along, but Disney's still here. So I don't anticipate in like 20 years there's going to be a world where one is going to win and the other is going to lose. The reality is that new technologies come along, for example, like the blockchain, and they push the current incumbents to become more innovative because they can do things at a speed which current incumbents cannot, and then the other incumbents catch up. For us as Circle, we see our role as being able to enhance the movement of money, at great speed at almost no cost. And there's a great cost to people, great cost to businesses and for people to move money around the world today. And we want to bring that cost down to near zero, and that will of course push traditional finance because they make a margin from that today, frankly, right? But we want to enable the technology that makes the world borderless for trade, for the movement of goods, so people can prosper, people can hold a currency that they're confident in. We're very lucky if you live in Singapore, Hong Kong, or Dubai to have a very strong currency, but we know just looking in the region, not very far, that is not a certainty for the common person, right? And so that's why I think it's super important that we're trying to play our part of bridging people who have currency and money, and they want to put it in a way that's secure and can be moved around the world securely. And we think that, obviously the virtual asset economy is also doing that, and we're trying to bridge that, essentially.
Ben, what are your thoughts on, you were saying that TradFi and crypto should work together. Could you share sort of more details on exactly what that relationship would look like? And is there any sort of use cases that you can draw from your life at MaskEX that can bring that to life?
Yeah, sure, maybe a few things. I would first, to continue on what our Circle Vice President in Singapore has mentioned, will we do so courageously? And what I mean by that is, yes, we can work together, but will we do it courageously? And will we do it without bias? And will we do it even if it doesn't benefit our business? I mean, I don't know what my business would be. I hope it benefits my business because it's our business. But let's say a Circle, which plays a crucial role, and they do issue USDC based on actual reserves held in the bank. Now, what happens if that banking system is not sound? What happens? Are we willing to step back from that and change the model? Or are we just wanting to move value without accepting that there may be ramifications of geopolitical significance as well? Because we are in Dubai. This is a real place in the world with real relations, political relations, diplomatic relations, economic status. Hong Kong, same thing. It's always been this, vis-a-vis China and the rest of the world. If these two regions, APEC and MENA, grow, rise, proliferate, it may mean something for the U.S. The U.S. is captured, as we mentioned, as Angelina has very eloquently explained. They're kind of in a difficult position. And that may be because it's not done courageously. And so the last bull market, yes, it was carried by the US, mostly by money printing, crazy inflation. So what are we trying to solve? What is it? Is it just moving value, or are we willing to change the roles and be prepared for some real changes? And then what does that mean for our business models? So this is like a broad answer because I think it's key. It's not so much about what are the actual collaborations? It's more like how do we approach this collaboration? Now, to be very specific, it's very valuable if I have my MaskEX app. Sorry to be so hard marketing on this, but there's a Visa card inside within Apple Pay. Yes, I can go to a store in Hong Kong with my USDT or USDC, for that matter, or gold, and it's the reality. And I can go to a store and pay. Yes, the settlement is in actual fiat, but the person who is experiencing this world may have never had a credit card, may have never had the opportunity, may have never, gotten the opportunity to actually pay electronically. So, again, these are the simple examples of how we can help each other and work together. But I do believe we need to be very aware of the bigger ramifications behind it. And I think. Look, we want to talk with the banks. Hopefully next week, we'll sit down with the banks and talk, and that's good. Because we do all want to benefit, but I will always do so with a consciousness of what it might mean in the long term.
Can I just add to what Ben's saying? If we can get the regulations and the rules out there to make it simpler for both on the banking side, the insurance side, working lockstep together with the securities and futures and virtual asset regulators, then you're going to definitely see a shift. The problem is you've got some rules here. Oh, HKMA has announced that they're going to regulate stablecoins, but that's a year and a half from now. You've got other regulators that are now coming out with regimes. I think what needs to be done is IOSCO needs to really work together and promulgate rules that go across the board, working together with the banking regulators and working together with the insurance regulators, and making sure that financial services actually works together. And that's what's keeping everything back, because you've got the US, which is reacting one way and doing enforcement and not putting out exactly what they want to regulate. Gary Gensler has never said that he's going to license people, whereas CFTC has been trying, but even them, they're just taking enforcement actions. There's no proactive licensing system. So the only licensing systems that have come out have actually been Middle East as well as Asia Pacific. And it's been very clear. And then you're seeing it in the UK and with the European countries. But without all of these markets working lockstep together, it's going to be very, very difficult. And that's where all of the different parties need to be convinced that virtual assets are the future and need to work together, especially right now with this crypto winter. People aren't making money. They're not focusing on that. And I think this is where regulators around the world can join hands and push this through if they work together.
Yeah, and I think, a recent example where TradFi are coming together and sort of forming collaboration is Project Guardian in Singapore. Mm-hmm. That was JP Morgan, DBS, SBI Digital Asset Holdings. And that made waves because they moved away from private blockchains. Yep. They started to leverage DeFi protocols, open source, layer one, public blockchains, which are built by global developers all over the world and which no one person owns or controls. So this was viewed as an enormous leap forward that very regulated, centralized intermediaries with endless compliant burdens could now leverage DeFi and public blockchains. Now, I know when we were discussing earlier, you do feel that regulation still holds them back in some way, but I think that initiative shows that it holds true promise, that they're sort of trying to change the way they approach this and realize that actually collectively to view public blockchains as a public good is going to be the interests for everybody. So what are your thoughts on sort of how they've moved forwards on a regulatory front to be able to conduct such a successful POC?
I think it's fabulous that the DeFi and traditional finance are starting to come together. You're seeing a very good example with the HKMA actually coming out to bid, where you're getting coin providers plus banks working together to come up with a CBDC proposal. So you've got the DeFi working together, you've got coin and token providers working with financial institutions. And guess who they're training? HKMA. They're actually training, and in fact, the CEO of HKMA Eddie is actually taking part in learning about these. So they're actually embracing working with this. And if they can actually embrace it, then they'll release the lock on banks, and hopefully everybody that's been unbanked will get banked. And hopefully they'll start changing attitudes when it becomes more and more normal. And the competition is already on. They'll have a cocktail party in 2 weeks' time to actually launch what these proposals will be, for example. The same with DeFi. I mean, the issue with DeFi is the regulators do not know how to deal with it. And Keith Choi, has already come out to say that we're going to regulate DeFi, but they don't have a plan yet. And this is the thing where the the industry, the DeFi industry, needs to work with regulators to teach them, and they themselves, the regulators, have to embrace an understanding that DeFi is here to stay. And only then can they work to actually come up with a good regime.
I personally, I'm not going to speak to the regulators here, but I would say that there's one thing about TradFi, and that's that they have all the profits and all the time in the world to experiment. And I'm a little skeptical sometimes, frankly, as to how real it is. There is the thing about the crypto industry is people are doing real stuff because they really need it today.
Yes.
And some of this stuff I think is experimentation on the edge. And I'm okay with it because it educates the regulator and that's fine. But I do think that we can't just have these experiments and projects that everyone talks about, but nothing really happens underneath it. The real action for people in crypto will know is happening because there's real people that need access to whether it's virtual assets or whether it's crypto US dollars. I mean, realistically, the real problem that we have is that people don't have access to, for example, we provide USDC, which is a US dollar on the blockchain effectively. People don't have access to US dollars. There's 5 billion people in the world who want a US dollar bank account, but how many people can actually get a US dollar bank account? Maybe a few hundred million, right? And this is the problem that we're trying to solve for. And I think the friction's kind of healthy between TradFi and the crypto industry. But realistically, there's literally hundreds of millions of people, there's billions of people that want access to a safe currency today or want access to other virtual assets today, right? And so whatever happens, it has to be happening a little bit quicker as well because we can't get caught up in honestly, the big banks can have these projects and play around with them all day long, and it can take 5 years, and it has no impact to their profits or the direction of the bank, right? So what I look forward to is more collaborative projects on real use cases that actually impact people that need access to, for example, digital dollars on a daily basis because they're suffering today. Their business can't move money around the world today, right? Ultimately, fundamentally, the crypto industry came up because of a lack of technology, speed, and access that people had from normal financial services. And so, yeah.
No, this is very interesting, actually. This is a good example because I agree that it's interesting HKMA is working with some DeFi projects or protocols. But here's the thing. If I look at regulation, I'm not the expert on regulation. I'm the anti-expert on regulation. But let's say if you go to the protocol level, Bitcoin is highly regulated. In fact, it is way more predictable than any central banker can ever offer in terms of monetary policy. It's very predictable. The code is very clear. It's very open source. And it's very clear. Now, as soon as you move a level down or a level up and you come to exchanges and you come to peer-to-peer, sure, it becomes unregulated and it becomes diffused. And so I always look at the core of things. So let's say for a DeFi product, for a regulator, say, oh, we're going to regulate DeFi. What does that mean? At what level? At the level of exchange or at the code level? What we're going to have rules around what code you may write or not? Or is it going to eventually kind of sift through, and if the code is corrupt, of course, it's not going to survive. So this is a question that we need to ask. And it doesn't matter, even if we decide to regulate, let's say, Bitcoin at the core, you're going to have to convince the miners, the majority of miners around the world. And any time a country bans the mining industry, it pops up somewhere else, which is great. This is what we need. This is what we need in the world. And it's already serving people, a lot of people. And maybe to add to that, a CBDC, for example, that's a great idea if you're a government. But what's really being offered? You see, if I'm not against it because I understand even in probably everywhere, every government will have some plans, and it's fine. It's fine. But my perspective is that I don't want to touch it because I also believe in a certain freedom. And I know that technology is helpful and it's great, but don't ever forget the principles that undergird that technology. And I think that a CBDC has its place, and a free public blockchain that is just that survives because of its quality and gets updated over the years because of a global consensus is extremely valuable and maybe even the most valuable thing.
Ultimately, blockchain technology is built on fundamentals of the internet, right? And so The internet is largely open and free. It does need some regulation. Our position is like we want regulation. We're not against regulation. We're very much for regulation. But we want regulation so that there's a certain standard set, for example, for stablecoins. And not anyone can call themselves a stablecoin. That they actually hold reserves and they do all the fundamental things that protect end consumers. That is really important. But after that, like, you should allow the players, if they can meet that standard, to go and innovate. And I think the point of regulation is to protect end consumers from, for example, dodgy stablecoins or dodgy assets, excessive speculation where an uneducated person can go and lose money. That's fine. But I think the boundary of regulation shouldn't be to put the same burdens that are stopping people from who want to have access to bank accounts, who can now do it via wallet, for example. Like, we shouldn't go that excessive with burden. And that it's challenging definitely for regulators. They're going to have to find that balance. We definitely do want to be regulated, but I think we still have to stay to the fundamentals of the internet, which is that it should be open and fast to be able to move money, in Web3, similarly to how you could once not send mail quickly, but now you can send email. In fact, who sends email? People use WhatsApp anyway.
A company I'm advising, let's not use names, but basically is trying to expand in Africa. And they have found that Africa is probably the most unbanked, and in fact, they need your coins. But there's just a complete void of any rules. And because there's so many different cultures, you've got the Nigerians, you've got the Ugandans, there's no consistent regulatory patch. Well, it's not even a patchwork yet. And I think this is where more of the developed countries need to help the underdeveloped countries work on regulations and rules to get the unbanked banked. If not, it's keeping Africa from developing. And
I mean, to an extent, I'll challenge that, because I would say that Africa may not have traditional banks, but they've had mobile money for 20 years. They're actually
correct.
way more advanced
Exactly.
than traditional
And
developed
that
countries.
we can play off of and use that.
Yeah, I mean, if you look within LATAM, certain parts of Asia, and definitely in Africa, you could argue that actually the developing countries could teach the developed countries something.
Exactly.
Right? Because they essentially are moving money much faster and have been. When I was living in Nigeria 20 years ago, you could send money by text message. I still can basically not do that in Singapore, for example, right? So I think it's like the other thing also about the crypto industry is that if you live in Singapore or the UAE or Hong Kong, you've got great banks. You can send money to someone really fast. There's almost, the use cases are very limited. The real beauty is like when you're moving money globally and you're coming from a country that doesn't have these benefits, right? And so I think that's where like regulators need to understand that they're not regulating a local bank account anymore. You're trying to regulate something that is global in nature from day one, like the internet, right? And similarly to the internet, when it first came out, people were scared that people were going to have access to all sorts of nefarious things. But eventually you figure out this balance between like allowing a pretty open internet, minus maybe a few things, and allowing people to sort of get on and trade digitally, globally.
So I'm so sorry, but this is great because it puts into question the idea that we're in crypto winter.
Yeah.
You see, crypto winter is a very price-focused and P&L focused.
For developed markets, yes.
It's crypto winter, okay, in some places, right? But in some places around the equator, it's definitely not winter.
No, it's not winter.
Right?
It's a huge opportunity. It's summer
Yeah.
for Africa, for example.
I can tell you, if you're in a country where your currency is deflating by 100% year on year, there is no crypto winter going on.
Yeah.
It's
It is a
crypto
crypto
summer.
boom right now.
But this is
Because
the
you're
thing.
like, let me get out of my currency as fast as possible into something that I can trust. It might be digital dollars, it might be Bitcoin or others. But the option is better than what I'm holding today.
So in a way, and this is maybe a little bit, a little bit on edge, but we always talk, and we have a habit in finance to talk about smart money. And maybe smart money currently is confused money. That's fine. That's the P&L approach. It's even fine that the US, which is still the global powerhouse in a sense, is fine that they're struggling a little bit. It really gives an opportunity to a lot of other markets, including this entire region and other regions, to have a chance. And that's what I meant, to really be courageous in adopting this asset class and technology and understand that there may be some huge transformation that comes from that. So I think I don't look at the crypto winter. I agree with you. It's terrible if your coin goes down, but it's a great time for adoption, really.
Just one quick point.
Guys,
I know you need
okay,
out
we've
of
got
time.
8 seconds.
I think you had a question at the beginning about we've got 400 million users. How are we going to get to the billions today? And this is honestly what I've spent my days thinking about. I try to really think about what the big picture is. Like, what's the point of us having this industry in the first place, right? And the fundamental thing is that technology has changed very recently, within the last year, where the usability has changed. Like, doing a non-custodial wallet and putting in these codes and stuff, there's no chance the average person is going to do that, right? But the technology has actually changed through wallet technology and others. So I think we're on the precipice of a lot of people that have an account, whether it's an Amazon-style account, whether it's a telco account, that is going to become a wallet, and they're going to be able to hold digital assets within it. And I think that is what's going to take us from 400 million to, say, 2 or 3 billion
Billions.
within the next year or two. I think that's going to have a rapid acceleration.
Okay, very quickly, because we're over time. Crypto or TradFi, who's going to win? Is it a clash or is it compatible?
It's compatible.
Ben?
It's like when water moves and sunlight shines, you get something like a rainbow. It's something different. Something new will come from it.
Okay. Ragulan, clash or compatible?
Well, it has to be compatible. It goes back to my Netflix, Disney, Amazon, Walmart example. But I would say that I think in emerging markets, crypto is going to start winning a little bit more over TradFi.
Yeah.
And in developed markets, maybe TradFi will hold a stronger position for a while.
I think that's a great way to end. This has been great. We could chat forever, but unfortunately we have to wrap it up. Thank you so much for being amazing panelists. Thank you everyone for listening.
Thank you for being a great moderator.